Let's turn to another retail loser today. That would be Nike. The stock falling 15% following its earnings last night. While headline numbers beat its guidance miss estimates, the stock is now at an 11-year low as it continues to focus on a turnaround that brought back former CEO Elliott Hill in 2024. The company admitting on the call that parts of the turnaround are taking longer than expected. Our next guest has lowered his price target from 80 to 57, but still's got a buy rating on the stock. Let's bring in Williams Trading Senior Equity Analyst Sam Poser. Sam, great to have you with us.
Thank you for having me.
When does Nike run to the end, the benefit of the doubt that so many Wall Street analysts are giving it? I mean, UBS, your competitor, wrote today that basically there have been so many times over the past 4 years where it looked like things would inflect, the business would inflect near term, and it hasn't panned out so far. So why keep believing?
So this is very complicated. The prior CEO, by moving to such a direct-to-consumer focused business, really axed a lot of the support mechanisms, a lot of wholesale business, and a lot of the support to that wholesale business, as well as a great deal of product development, specifically in the more moderate channel, but also got over aggressive with some of the classic product like Air Force Ones, Jordan 1s, and Dunks. The overall situation is that if you ever broke a bone in your body, you fell on the floor and broke your ankle, it can take years for it to heal, or months. And in this case, they have a big fracture that they're trying to fix. And if you talk to retailers in the U.S., pretty much across the board, they're telling you that they're seeing improvements in Nike, but there's a lot of hangover that they're still clearing through. I think they're doing the right things. I think. And it's just taking longer. And I think China is the one that, really was the worst of it, because I think they shifted gears over there and didn't invest under John Donahoe's reign at the top. And it's just taking longer than but I do like what I'm seeing, what they're doing. So I understand why the stock's down today, and I'm not pounding the on this, but I do think that they're moving in the right direction a bit more slowly than they'd like to see.
Sam, in these years when Nike has been struggling under all the challenges you mentioned, has there been any damage to the brand, any impairment of their ability to go back and access the kind of market share they had before, given that it maybe arguably has become more crowded with new brands?
That's a great question. I think one of the main things that happened was they had a large group of people supporting wholesale. They call it Eakins and some other groups that were like marketing support to the wholesale accounts, both in their offices and in the stores. And that was completely ripped apart. So they've been rebuilding that. And I spoke to one retailer the other day who's a running retailer, and he said his Nike business, was like 1% of his business. Now it's 9%, and it's growing great. And that was the first place where they really brought back that kind of support. Granted, there has to be great product and everything else. So I really look at this as a support mechanism. The new Jordan retros are selling well. Air Force Ones sell-through rates at full price are improving. They called out Air Max on the earnings call. So there's lots of green shoots going on, but it's not all there yet. And I think that in North America is moving along the fastest, and they're only about halfway as built up in that support mechanism for businesses in Europe and the APLA. China is a different model, so that's a different fix.
All right, we'll continue to watch it. There were a couple of other analysts that did downgrade today. Maybe that's part of this process of the bar being lowered. Sam, good to talk to you. Thank you.
Can I say one last thing?
Yeah,
I think that if you thought it was good yesterday, the picture wasn't as pretty. But as I wrote in my note, I had plenty of opportunity to downgrade it, but the stock is acting a lot worse than I think the company is. I think the company is in much better shape than it was 3 years ago right now.